Morning guys, it's Ian from OSBFX. It is Monday the 22nd of November 2021. It's 7:39 in the morning in the UK. I want to go through the single currency charts, highlight what I'm looking at this morning, and whether or not we're going to break higher in the US dollar. And for that, I'm actually going to look at all the dollar denominated currency crosses. So let's get to the charts first. This is the dollar basket, so the black line is our bespoke resistance level, and you can see here on this hourly chart it's looking a little bit nervy. So we've moved up to the 88.6% pullback level. That's quite a common pattern or fib level for retracements as far as cipher patterns are concerned, and we're just holding on to that now, but we need to get below this level. And it's if we break above Friday's high or out of this range really, this channel here, then it will be a concern for dollar bears, because this pattern then comes into play and we could potentially move higher towards 261.8%. So should I be concerned? Well, I want to go to just the dollar majors, and I want to highlight what the potential patterns are on here. So first of all, euro against the US dollar. Remember, the black lines are bespoke resistance levels. So here, these black lines line up, if you like, with a fib pattern. So this would eventually get up to form a back formation. So buying this dip to take me up to around 116.07, dip down, and then a move higher to 118.33. So at the moment, I'm not concerned. Obviously, if we breach the low, then it starts to become a concern. So I'd need to have a bullish bias in cable. And if we look here, again using the black lines, this highlights a pattern, again a back formation but at higher levels, with this resistance level from last week playing to make up the BC leg. So again, looking bullish for sterling dollar, so bearish for the US dollar. If I go to dollar Swiss, let's go to this time frame. Okay, this formed a back formation here between 93.20 and 93.36, and we move to the downside. If we go to this time frame here, again using the black lines, this looks like the leg down in a Gartley formation. So again, if I'm using my system, I shouldn't be selling the CD leg. I should actually be buying it when it gets to here, which is around about 92.18. But the immediate bias for the dollar is still to the downside. If I go to dollar yen, and again here, I've really got no support until this level here, which is at 112.90. So again, it's got a downward bias for the dollar. Dollar CAD, if I go to this time frame here, again, the black lines of my bespoke resistance, 61.8% is the fib level to drive it lower to then come up to form a Gartley formation. So again, am I concerned? No, the bias is to the downside for the dollar. If I go to New Zealand dollar, again, we could see further losses in New Zealand dollar down towards my black lines, because the New Zealand single currency is in no man's land at the moment. But this says that I should be buying dips in New Zealand dollar, so it means lower US dollar. Last one is Aussie dollar. Here I've got support located at 72 the figure, so again I should be buying the dip, selling the US dollar. And last but not least, let's have a, which time frame should we go to this morning? This one here. Okay, it's going to be quite a close call, but again, using the bespoke support and resistance levels, I've got nothing really to form a pattern until down here. So this is negative for the dollar, for this drive lower towards this 93 handle. And if you look here, I'll just put this highlighting how we could bounce off the bespoke support levels, to first at 95.01, then at 93.91, and then down to this level here at 93.13. So virtually every time frame or every currency pair that I've got is highlighting lower levels for the US dollar. So should I panic about this sort of non-movement, if you like? I mean, this is the 8-hour chart, so you can see sort of overnight we've really gone nowhere. But the bias for me still has to be to the downside. So when I look at other single currencies, they're really in no man's land at the moment. I like the euro for a move higher, potentially to form this pattern. So moving higher in the AB leg. But all the other single currencies are really in no man's land at the moment. The dotted lines, like we said before, are bespoke support and resistance, so we're just in between them. Swissy, sort of in between them. It's struggling to make any sort of patterns on any of these sort of currency pairs. So basically what it says to me, apart from the Aussie dollar looks interesting at this level here, which is 112.61, so a move lower in Aussie dollar to then make that Gartley formation that we talked about, to then drive Aussie against the US dollar higher. But the others, as they sit alone, are really in no man's land at the moment. So basically the driving force, as far as I can see, against those moves in the FX majors and the dollar denominated FX majors are all going to be the dollar. They're not going to be the counter currencies that drive these prices higher or lower. Okay, guys, hope that makes sense. I'll be back soon. If I do have something to shout about, please join our Telegram group, OSBFX. It's free. There we talk about different trade setups, single currency setups, cipher patterns, chart formations, stops, targets, blah, 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 blah. Okay, many thanks. See you soon.